I think it is interesting that the Russian issue has certainly shifted away from markets' attention, and I think there are two reasons for it. One, of course, is we've seen quite a bounce in the oil price, and at the end of the day, Russian markets are always, of course, heavily influenced by that. And secondly, and maybe this is just temporary, but of course the fighting in Ukraine and the latest ceasefire appears to have sort of held. I constantly keep at the back of my mind something that ex-Finance Minister Kudrin said to me a couple of years ago when I last saw him, that very strangely he predicted to me that at some stage Putin would become a very different character than we all often think of him. And I ended up sort of to myself the past few months joking that he meant he'd be even crazier than he's been, but I think he actually meant he'd be shifting course. So, you know, I don't think it's necessarily as predictable as we all often superficially think. And I think the general view is it's just a matter of time before they all start fighting again, and then next minute Russia's back in the heat of market pressure. But you know, I don't know if that's true, because certainly when people are looking for value investments around the world, Russia is obviously, from a currency and equity perspective, very cheap compared to anywhere else. I was speaking at another event the other day, and I was looking at the total returns of all the BRIC equity markets from 13.5 years ago. And by the way, it's quite interesting, despite Russia's problems, still stronger returns in dollar terms than the US and the rest of the world. But the point why I raise it is India has so spectacularly outperformed now the other three that a value person would be looking at selling India and buying Russia and Brazil. But I don't see a spark for that. But if we continue to see a calming of the tensions and oil prices just remaining stable, and I think you might see some people trying to buy Russia, to be honest.
Jim, where does that leave China?
Not personally inclined that way, I will quickly add.
Jim, where does that leave China?
I remain...
Sorry, Jim, go on.
Yeah, I remain much more sanguine about China than I see so many people making reference to. Yes, the latest data's soft, and maybe we're growing below the 7% target that the President just recently announced. I'm actually going to spend the whole of next week there, so I'm very much looking forward to that. But you know, the key is that there is slow evidence of rebalancing going on. A couple of things to cite. There's a very interesting report in the media this morning that the climate change emissions have started to actually show signs of being better than expected in 2014. Main reason being China is doing a lot better on emissions control than expected, which is an important part of why China is slowing, because it's deliberate. Second, in some ways even more substantive thing, if you look at the latest data, and everybody's so excited about the weakness of industrial production, retail sales spending, which is not a perfect but the only monthly indicator we've got of consumption, continues to hold up pretty well. And what China's really focused on policy-wise is, of course, the rebalancing of consumption relative to production as within a framework of better quality of growth. So yes, they've got quite a lot of challenges, particularly related to bad debts and property prices slowing, but I think generally speaking China's ongoing performance is pretty impressive.